Okay, I think we can start already. So welcome everyone. For those who are new, very nice to have you guys here. I think, I've been talking these with my team, and for you guys that haven't been on my webinar last week, we've basically gonna run down, thanks Lawrence, we're gonna run down all the currencies. No worries, Keith, no worries. We're gonna run down all the currencies, so from US dollar, euro, pound, CAD, and all of the other currencies, and then we've basically, I'm gonna give my view and then what I think it's better to trade against. So it's pretty simple. I'm gonna try to keep it easy, but as requested by most of you last webinar, I've been talking to my team as well, and yes, I can go for longer than 1 hour. So if you guys, want to stay longer than 1 hour, I may be able to give you all a explanation of macroeconomics. So I think for now, what we're going to do first is go through the economic calendar, and there's not much to do this week. There's only a few things for Australia tomorrow, the CPI, a few Fed Powell speech, and that would be it. But anyways, I'm going to run down through it, and we're going to see then afterwards a bit of, I'm going to teach you guys a little bit of macroeconomics and how, not going to teach you anything today, probably going to present to you guys what I'm going to teach from now on. And it may sound happy for once, I guess. I will be doing probably another webinar, but not for this, what I'm doing right now, not like for analyzing the pairs, but for, teach you guys on how to get macroeconomic data to trade. So basically, that's it for today. And I think we can start. There is 13 people here. Very nice. Let's go then. All right. First of all, let's open Google and let's go for FinLogix. All right. And then go to calendar, economic calendar. I actually have done a video today on FinLogix. Very nice and very cool because I didn't know about this. So just on the right here, on the top right, you can actually click on it, and there is already the top most important news throughout the week, separated by day. So yesterday, for me it was Monday. At 6 o'clock, we had the German IFO business client set for September. And then today we had, midnight 30 United States Dallas Fed Manufacturing Index. We had the Kashkari speech, and then 11 o'clock we're gonna have United States S&P case chiller home prices year-over-year for July. And we're going to have the month-over-month for July as well. On Wednesday, we're going to have Germany GfK consumer confidence. So very important for Euro. Pay attention on that at 4 o'clock on Sydney time. And then 10:30, we're going to have durable goods orders month-over-month on August for the US dollar. On Thursday here, we're going to have inflation rate year-over-year for German. So basically the CPI for September. And 10:30, we're going to have a 10, and then 30 minutes later, we're going to have the GDP for US. So very important day, especially for euro dollar, as we're going to have, the euro on German side, and we're going to have the dollar just 30 minutes after. And then on Friday, we're going to have a few important things for for US. So at 4:45, we're going to have the inflation rate for France. And then at 10:30, we're going to have the PCE price index, the core PCE price index month over month. We're going to have personal spending, and then we're going to have the personal income, right? So not much important, those two. I mean, not much important for the market, but it is important news. I'm not saying that this is, this is rubbish. No, it is important, but not important for us. It won't give any, I would say, momentum, like, oh my God, huge momentum in the market. That should be fine. All right, so that would be for this week, September 25 to September 29. Just one thing I want to show to you guys, maybe you haven't seen. Oh, why my computer is so, okay, that would be good. So if we go to acy.com, if you guys can do this with me just for a second, just go for acy.com.au or just acy.com. And we're going to go to learn, and then we're going to go to market analysis here. We click on Luca Santos. Oopsie, go. Okay, there we go. So we click with on my name basically, and if we have a look on Forex Weekly Recap, I do this every Monday, right? Every Monday. There is this. I go to the office on Sunday night. All right. I get off from my family time, usually from 4 to 5 or 5 to 6, all the way to 10, 10:30, 11, midnight to do this research for you guys. So this is very important. And your fundamental analysis, if you want to, if you want to understand macro analysis, would start here on those two reports. All right. Guys, not because I'm the one that writing it, but this is a bank level of depth of the market, right? So if you always, sometimes if we go to, let's say, ING, if we go to ING research. All right, let's go. Okay, it's loading. All right, so just accept. That's it. Oh no, that's not good. What's happening? Anyways, so if we go to ING, think.ing.com, we have, those researches that go globally, or maybe, G10 Forex, emerging Forex. So basically what I do is I read those researches every single day. I get my hands on those researches every single day. So let's say G10, right? The G10 Forex. Anyways, so I get my hands on those researches every day, and these are basically a resume or a summary from here, right? So you don't have to pay anything, free. So if you click here, right, if we go here, so basically what we're going to have is, I know it's a bit blurry because when we upload for the website, it gets a bit blurry, but we can't do much. Anyways, so, central banks stole the spotlight this week, talking about last week, as they react to persistent worries about inflation and indication of a slowing economy. Among the various currencies, the New Zealand dollar emerged as the top performer, while the British pound struggle impacted by the Bank of England recent policy shift. In case you didn't catch the most important Forex updates, here's a summary of the Forex market happenings from last week. So what I do is I take every single currency, so USD, Euro, and then I go for pound, and then I go for every single CHF and all the way to JPY. And I do a summary for you all of what happened and what it is happening with the currency. Let's say for instance, US dollar, right? So let's go here, US dollar. Once again, the US dollar found itself swatted by the speculations concerned by the Federal Reserve actions. Blah, 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 blah. As expected, there were no alterations to the Fed. However, what could men of God was a commitment of hawkish stance. So, and I separate the bullish headlines arguments and the bearish headline arguments, right? So it's all here. You guys don't have to do anything. So if you go to acy.com website every day, it will be those blogs for you all, okay? So anyways, coming back now, let's jump to the chart. I just need to take this off from here. Okay, ACY, there you go. All right, let's talk about the US dollar index first. Hey, Sylvain. US dollar index, where is it? USD index. Why it's not here? It's supposed to be here, but okay. Oh, here. All right, there we go. Okay. There we go. US dollar. Everyone's ready? Can I start? First of all, right, I've talked about the US dollar already this video on this week on a video I've done for the YouTube channel. But basically, guys, being quite honest, the US dollar last week was, basically stronger than any other currencies, otherwise from the New Zealand dollar. But just because, the speculation about the Federal Reserve next move. So everyone is trying to speculate what's going to happen with the Fed next. Are they going to, hike? Are they going to pause again? Are they going to cut rates? The release of the FOMC, latest monetary policy statement confirmed that they are hawkish, but they're not willing, they did pause, but they are hawkish, but they are not willing to cut rates this year, right? So all the market that was expecting the Fed to cut rates this year, they were wrong, and now they are moving those cuts. There were, if I'm not wrong, 55 basis point cut expected to be cut in 2023. It's not more expected, so they moved these to 2024. So what that means is that basically all the expectations of the market on that time for this year, 2023, it's not the same anymore. So what we're expecting now is that the Fed will continue to be hawkish, and we're going to have one more hike. All right. The main economic event for this week would be the U.S. sentiment, would be the consumer confidence on Wednesday, so tomorrow, the GDP and unemployment on Thursday, and the Powell's speech and core PCE on Friday. So that would be the top four, for US sentiment, consumer confidence, GDP and unemployment, and the Powell's speech and core PC. So 5 top ones that we have to pay attention this week. So overall, the forecast for those events are positive or neutral. Right? So basically, we are expecting to be positive or neutral. You're not expecting to be anything because Powell on this pitch will be pretty neutral to hawkish. He won't be dovish, right? So there's nothing to fear, I would say, on that speech. But the other ones, the PC, the consumer confidence, the GDP, and then unemployment, I guess there will be a more towards neutral to positive for those releases, unless we see a downside surprise across the board. I think we should continue to see the US dollar strength towards the week, especially if this coupled with risk off sentiments across the market. However, we must keep in mind that the US dollar has seen a consecutive weeks of strength, as already mentioned for you all. So profit taking would be completely normal at this stage. And I think it is happening, to be honest, right? So where is my pen? Okay, here. Okay, so let's go for the box theory again, right? So we had a box on here, right? And then we moved up and we came back for this area, right? And then we had sort of a downtrend here, right? And then we moved up again, and then we've done a box again, and we've moved up. So what I'm expecting is somewhere around 105 area, sorry, 105.6, 105.7 area, right? 105.6, 105.6, 5 to 105. See, 105.7, right? So this would be my range for now. I guess we can come back slowly to this area, but continue to go up. Probably this will happen as take profit, you know, people taking profit from all of those longs that have been accumulating here, a few of them here, and of course a few of them here. So we had these three entry points that now people are maybe taking profit, and we're just waiting for the market to drop to those areas so we could long it again, right? So this would be my primarily retracement area. I think there is, that's MT5, so let me check something just a moment. There we go, this one. So pretty much what we can expect is something around here, and then somewhere like that, right? So I think we can continue to long US dollar for this week. This week will be slow, right? Don't expect anything crazy, because the market is digesting what just happened last week. So what I mean by that is that, yes, the market is sort of, how can I give you an example on that? The market, it's sort of like, don't touch me because I'm feeling weak. So anything you say, I may cry. You know what I'm saying? So like, if all of those data come neutral or positive, that will be, you know, putting wood into the fire. So then the fire will get bigger. But if those data come neutral to negative, that I think it won't, then it's taking off the fire. But I guess we can recognize this move down that will happen into a profit taking, right? But then when we look to these, we may think, okay, but what about, you know, the currencies that may be using the US dollar, like Usdjpy, euro dollar, and the rest. So let me grab euro dollar just a moment. Okay, all right. So I've done a video this morning. I think it's already live. So let me show you all. Just a second. YouTube. I know you guys can't see my screen, but I'm getting there. Just a minute. ACY Securities. Yeah. Okay, this one. All right, so I've talked about the euro dollar here, and it's so crazy because it is doing exactly what I said I was doing. But anyways, not magic, guys. It's just, you know, just basically what has to be, the market has to follow something, and it is following the macros. So anyway, so here we can see that I've clearly let me put forward, clearly mentioned that the market will come higher to this level, right? And this is where I will be probably looking to short the market again. So it's basically happening right now. So if we go and create the same box and this area, I do have a position somewhere here, I think, on my account, not on this one. But we can just wait for the market to come towards this area. And even if it comes, you know, even if it goes higher than that, let's say somewhere here, that would be better. So we can continue to short this euro dollar until 105. So I've mentioned so many times that we would hit the 105.8 first. We did hit 105.8, so it's here. So for those who have been to my webinar a few times, I've been, calling this target more than 20, 100,000 times, and it did just reach it. And now my other target, it's on 105 that I already mentioned as well so many times. So that would be a nice trade for us to catch to the downtrend. That's my personal take. So you have to do your own analysis towards this and see if fits your your own risk profile, your analysis. But that's my trade-off. That's my opinion. Okay, so I will wait for the market to go a little bit up. Indeed, if we go to the 5 minutes chart, where is this now? Here. If we go to the 5 minute chart, we see that there is an area of the market can come back. So probably it will come back now, retrace this area, and then go up to somewhere around here, and then after that come back to the 105. Now you may ask me, all right, so why don't we buy these? Because it doesn't make any sense for us to long it now. Well, you can do it, but for me it doesn't make any sense, because my approach to the US dollar is bullish and my approach to the euro is bearish. So if I'm bearish on euro, I don't want to catch those small moves, guys. It's just basically sense. I would rather catch a 500, 400 points, right? 40 pips, or should I wait the price to come here and catch a 1.5, so 140, sorry, pips? It's basically the risk is tilted here. We call this the delta of your portfolio. It's tilted to the negative. So your exposure, it's high, but your profit, it's low. So it doesn't make any sense. So we need to preserve our capital, all right? So I would wait until this area and then short it again. All right, delete. All right, so this is euro dollar. Now GBPUSD in terms of the US dollar again. I do have a short position on the GBPUSD. I'm gonna go into 120 now. So 123 was my first target that I've mentioned 100,000 times already. We did hit this target and we went way low, and I was looking for targets. So I called a few friends, from JP Morgan, from ING, from MUFG, and all of those institutions, they're looking to the 120 now, especially ING. So I talked to them and they were like, oh yeah, we're going to continue to short pound. So this is not inside information. There's nothing. It's just a personal talk to friends. So don't worry about that, guys. But anyways, so 1.20, and we may be going lower and lower. So what I think about the pound is I don't see any point of entry here, to be honest. The market is quite, the entry point, it's already gone. So if we look at the market like this, the only entry point that the market gave us, like clearly, it was here on this box, right? And then after that, we had, the consolidation that I already talked. We went down, we came back, we retested this area here, and then we went down again. So, I don't see the price coming to this area at the moment. I guess it's too much. It can come back to 123, right, somewhere here, but it is still too much. Okay, so in my opinion, I would wait for a better setup to showcase here. But yes, it is a short position in my opinion. We don't I wouldn't long the pound for the moment. But if you know if your analysis says long, then it's your analysis. This is my personal take. All right, so Eurodollar, in my opinion, it continues to go short. We're going to have a small pullback probably today, tomorrow. And then pound, my target is 120 now. Now, if we go for USDJPY, I've just hit my whole target. So we had the first one at 148, and then my target was at 149. We did hit 149. So now, what do we expect is basically we have a few options, right? We continue to go up and just continue to go up, or we have a retracement to this area again, right? So first we had a retracement to this area. I'm looking at 148 as a very nice area that people are looking to buy it. But I guess, you know, if we see the US dollar index coming lower to the 105.7, 105.65, that's the area I mentioned to you all, we may see the USDJPY coming to the 104.5. So somewhere, somewhere around here. Okay. Would I like to long it here? Not me, but if it makes sense on your analysis, then yeah, definitely go for it. I would say USDJPY continues to go long again, and the other target would be 150. Okay, so my next target would be 150, but I'm just gonna wait for a better position. So here, okay. Okay, euro dollar short, I've mentioned. Pound dollar short, I've mentioned. That's my take. And USDJPY long as well. Let's go for euro analysis now. All right. See how it goes. Here it's a good box, break, come back, break, box, break, come back. Probably gonna go down. All right. So the euro moved it very crazy last week, suggesting that other currencies were more influential than European news and data releases. However, on Friday, the euro fell sharply due to the disappointing Eurozone purchasing managers survey data. So we had the PMS, the Purchasing Managers Survey, and then this negative data overshadowed any positive factors and weighted on the euro's value. So we may continue to feel these this weight data on the euro dollar continue to go lower and lower. Overall, I guess the euro lost ground against most major currencies last week, and except for the CHF that I want to talk to you guys later, because my view is switching on CHF, and the British pound as well. So euro indeed is stronger than the CHF. That's the Swiss franc, and the pound, right? So euro is stronger than pound and CHF. Both of those currencies also face bearish pressure after the prospective central banks unexpectedly decided to keep rates, interest rates unchanged. So we did had the CHF bank, the SNB bank, the Swiss National Bank, pausing the rates that everyone was expecting to be a hawkish instance. They did pause the rates, and this, did change my view, especially as I was pretty bullish on the CHF, and now I'm more mild bearish towards the CHF. So let's go back to euro. This week, there are a few economic events in the Eurozone that can impact the euro, so we just have to pay attention on that. On Monday, we did have the German IFO business that I've mentioned for you guys. And then the Spanish CPI as well on Thursday. And then Friday, we're going to see the flash CPI readings along with a speech from the ECB President Lagarde. You know, the forecast for this week, I guess the data will be mixed, right? So we're going to have a few bearish, a few bullish data. So we might maintain my neutral bias for the euro, but a potential short opportunities to the 105 against the US dollar. But I guess the euro, it's quite oversold at this area. But yeah, that's what I've mentioned for you guys. I've seen some news going around that most institutions, they are reducing the long positions. But if I show to you all the COT, the commitments of traders, let me grab it pretty quick, just a second. Where is it? Where is it? Okay, here. Let me log in. Just a second. So basically, the COT, the commitments of traders. Oopsie, sorry, wrong. I'm not showing this screen. There you go. So basically, the COT is a tool that we use for to see whether institutions are positioning themselves. So they have to report for the CFTC. So that's the Commodity Futures Trading Commission. And you can grab this data for free. If you guys want, I can do a video for YouTube to grab this data and make it look nice like that. Because when you grab the data, so let's go for commodity exchange here, and then you can choose short format or long format. Basically, we need the futures only, so we don't want options combined. So we just want the futures. So if we click commodity exchange incorporated or long format or short format, let's go for short format. We can go, and then we're going to have this. So we're going to put into a spreadsheet, but for a spreadsheet, we need the long format. So when we have the long format, it's basically like that. So we can see where they are net position, if they are getting more trades long or if they're trading more short positions, and how many people are trading long or how many people are trading short. Okay, and then we can basically do the spreadsheet look nice and look like that. We can grab the data all the way from 2000 and I think it was 2001 or 2002, something like that. Anyways, so what we need to pay attention here is basically the net percentage. So if it is negative, then we have more short positions than we have long positions. So basically what happened on the on the AUD is that this is just an example. Like let me go pretty quick over it because I don't want to waste time on here. So on the 12th of September, we did have 1.3% long, right? But then on this week, on the 19th, on the 19th of September, we switched to negative. So that means that we are negative on the AUD. So basically, institutions are short in AUD. Then for the euro, we have here, right? Euro. And from the 12th, we did had 1.8. So they kept longing euro. But this week, we had an increase on short positions. See, we increase on short positions. We had 6 new short positions on the market for euro. And we had 2 of long positions. So they took off 2 long positions and they added 6 short positions. That means that now they are negative. So that means now that there's 0.7%. So they reduced 1.1% of their positions, right, from the 12th of the 19th. So what that shows to us is that the euro is slowly getting short positions in. And if we look to the US dollar, we had a massive flip. We call this the COT flip. Basically, this whole thing here, it's called a COT, right? So this whole dot is called COT. And then when we have a negative to a positive, we call this a flip. Okay, let me give a sip on my coffee. And we call this a flip. Why does that flip? Because it jumped from negative to positive. And then when it jumps from negative to positive or positive to negative, like this one here, positive to negative. Oopsie, sorry, this one here, negative, positive to negative. We call it a negative flip, right? Here, positive flip. So on the dollar, we did have all the institutions stop shorting it, right? We can see that they were all shorting it. Oopsie, since here. All right, since what day was that? The 15th of August. And then now on the 19th of September, we had a flip, a positive flip. So we have more positions getting added on the long side now, or we have a few positions moved out from the short side. So that indicates to us that we had they left the euro, they're adding short positions on euro, and they are adding long positions on the US dollar. So that means that the euro may be going slower than it was previously, and the US dollar may be go higher than it was previously. All right, so I hope you guys did understand that pretty quick, very like on the top of it, so not much where is it now? Not much like complex. So anyways, I've mentioned that, right? So we may be going, you know, a little bit up here and then down again to the 105. Already mentioned that. Other currency that I'm looking now to trade on the euro side is the EURCAD. So if you look EURCAD, it's been pretty interesting in the past few days. Why is that? JP Morgan is holding a short-term target at the 140. All right, 140. So they are holding a short target at the 140, and guess what is happening right now? We are having this again box here, right? And the price was ranging here, and we had the breakout. We're coming back slowly here to go lower. So the euro, it is losing strength slowly, and it is losing strength. The CAD is sort of surfing the wave with the US dollar, because US dollar and the Canadian dollar, and sorry, US and Canada, they are very they are friends, you know, friends, so they one help another. So we may have bearish movements all the way to the 140, 141 on the EURCAD, and I've mentioned that on my video yesterday. All right, so that would be it for the euro. So if we look on the euro CHF, indeed, CHF is losing a bit of strength. Right, so euro is probably going to this area here, but there's nothing of interesting to trade on euro CHF at the moment, as because CHF is slowly changing, right? What I mean by that is it's slowly going for positive, for negative. So I wouldn't trade, that's my personal take, I wouldn't trade euro CHF now, as it's like too complicated currencies. So I need to make sure that I will, expose my portfolio into Euro CHF, as I'm not yet done for my analysis. So I need more data coming from Swiss to be able to long it. All right. So that would be it. EURCAD and euro dollar. That would be my favorite two trades for the euro. EURCAD was here already. So let me move it here. Okay, done. Now, let's talk about the pound. There we go. Okay, that's a 5-minute chart. I want a 5-minute chart. Is it all good, guys? Everyone, questions? Nothing like that? All good? Can I continue? Thumbs up, thumbs up. I guess everyone's fine. Yes, cool. All right, so let's go for the pound. The pound had a tough week last week.
Almost.
Let me mute you. Sorry. If you have any questions, please just write it. So on that way we don't interrupt the live. Anyways, so the pound had a tough week last week, and just on the beginning, just on the end of the week, I was able to grab these scalping here just on the news, so it was pretty cool. It was like 64, 63 points, pips. So it was very nice. It wasn't luck. I can guarantee you that. It was purely, I know what I'm doing. So we did add these, come back to this area of this little box, and I've just shorted, and then it was pretty quick, 5 minutes, 62 pips. All right. Anyways, so let's come back for the 1 hour. All right. So it had a tough week last week, falling steadily, very, very, very high, very, very sharp falling. Right. So from the 19 here, let's go for, let's say here. Yeah, we did fall somewhere on here. Yeah, 140 pips. All right, so it was a lot for the pound. This was mainly due to the Bank of England previous statement suggesting that the interest rate would not be raised further. And the investors were concerned about the central bank's caution stance, as this weighted on the pound performance. So everyone was expecting that the Bank of England, would raise the interest rates, but they did not raise the interest rates. That doesn't make sense. Did not. It doesn't say did not. They didn't raise the interest rates. So that made the market fear that what's going to be next. And, they made clearly that the central bank had a very cautious stance. That means that they may not hike next time as well. And this weighted on the pound performance that I just mentioned. So let me see something here. I think my computer is dying. Anyways, so we just have to pay attention of any release from the pound, any news that may come, not from the pound, from UK. So we just have to pay attention on that. All right. So two events in particular put further pressure on the pound. First was the UK inflation figures released on Wednesday last week. Were disappointing. Was lower than expected. So this already made very clear that I think that was when the boy was like, okay, we may not need to raise. We may gonna pause because inflation came lower than expected. So that would be good for us, let's say, for us to not raise. All right. First, and then this made the investors unease about the state of the economy. And second, on Thursday, the boy voted 5 against 4 sorry, 4 out of 5 to keep interest rates at 5.25%. While the decision was not unanimous, it was sent a mixed message and added to the challenges facing the pound. There are no major economic events scheduled for this week, so the pound is likely to go a little bit further in value. So we may see a little pullback somewhere, but that's the thing. It's pretty hard price action here, and I don't see the pound on this area. I just don't see it. But yeah, I definitely see it going down, but we may have to wait for higher prices to short it, I would say. But that would be for the pound. I keep bearish on pound. I just don't feel that's the moment for shorting it right now. But this is, you guys have to do your own analysis. All right, let me grab my copy again. All right, so again, short on pound, short on euro, and long on US dollar. Let's move on. Let's go for the Japanese yen next. Ooh, that's Japanese yen. Oh, okay. I would I would express my short on the GBPCAD. I've been expressing my short already on GBPCAD since last week when I saw this box here being formatting, right? So it was, oopsie, oh shit, oh here, delete, where is it? Here. So when I saw this box being formatting, I was like, that's interesting. It's on the meat of the box, so I may give it a go on here, just to see how we're gonna go. And indeed, this trade worked pretty well. So we are right now at nearly 200 pips of profit, and I may go a little bit further down until 163. All right, so that would be my main target on the GBPCAD. Yeah, look, if the price comes back to this area, that would be good. I may add another short position, but primarily that would be the entry point. Okay, so GBPCAD would be a nice trade as well. Anyways, moving to the next one, Japanese yen. So let's go for Usdjpy. So the Japanese yen had a volatile week last week with downward bias. So several factors contributed to this trend, including positive economic developments in Asia, particularly China, stimulus efforts, and the expectations that the BOJ, the Bank of Japan, would maintain its ultra-loose monetary policy at its meeting on last Friday. The yen briefly strengthened in response to a hawkish move by the Federal Reserve, which sparked a risk-off sentiment that drove traders towards safe haven assets. But however, this rally was short-lived. So we had this little short-lived rally, and indeed I was like, that's good, because I may be looking to long more. I may be looking to add another position here. So that was indeed a very good position. So as I was saying, it was a short-lived, and the mood shift during the US session on Thursday, possibly due to a better than expected US jobless claims data, which it supported the notion of a soft landing. But the Fed already mentioned that they won't be able to do a soft landing. But the market is still expecting a soft landing. But the Fed already said that they won't do a soft landing. So that's a pretty tricky situation there. Anyways, so when the BOJ finally announced its decision on Friday, You know, of course, they kept the ultra low interest rates unchanged at negative 0.10% as expected. You know, as I've been mentioned already, they need to do further. You know, they have much to do yet until they be able to like, oh, okay, now we can move for a positive interest rate. They need to see higher inflation. They need to see more employment, less unemployment. They need to see lots of things for them to be able to, you know, address these negative interest rates and switch to a positive interest rates. But once they do that, that will be very nice opportunity to short Usdjpy and other weaker currencies against the JPY that will be strong on that moment. Because, you know, think about it. Japan have been like that for ages now. And if they change it, that would be a historical move. Everything that it's a historical move, maybe, you know, it will be a huge move. So we just need to think about how big this will be. So once it happens, it won't happen now. I can guarantee you that. But yeah, I can't guarantee anything, but you know what I mean. They need to do a lot more to get these interest rates negative to positive. You know, so it's still pretty bearish on the Japanese yen trajectory for the rest of this week as well. So this is what I am expecting, you know, somewhere, some pullback, and then after that, a continuation for the long side. There are ongoing rumors of the BOJ, you know, the Bank of Japan do a Forex intervention this week, especially as USDJPY continues to approach the 150 mark. That's my next target. You know, I maintain my bearish stance on the yen, as I've just mentioned, but recommend trading with caution, just because there are rumors. BOJ interventions are often unannounced and lead to large moves to strengthen the yen. So please be mindful of your positioning and risk management this position. But I don't think it will happen, but I'm just alerting you guys as a friend. Okay. All right, Keith. Thanks, man. That was great to have you now. Have a good one. So yeah, so I will continue bearish on the Japanese yen. Let me grab another sip of my coffee. It's 7 o'clock. Should I continue to drink coffee? I don't know. Should be fine. So I continue pretty bearish on the Japanese yen, and I continue to see 150 as the second target. But, you know, if it happens, if the BOJ actually comes and intervene it, then we can expect something like that. Let me show you. When was that? That was exactly this one. Um, 2022. Yeah. So can you guys see this candle? This one. That was 1 day. Right? That was 1 day of move. That was 561 pips. 5,650 points. So that's a Forex intervention that the BOJ have done last year. So what they do is they sell US dollars. So the Bank of Japan do a desk operation. So they go to the trading desk and they sell US dollars until they can't anymore. So then the Japanese yen sort of strength for a period of time and don't lose that value too much. All right. So yeah, I would continue to long USDJPY for now. Just be careful with that. CHFJPY, it's starting to be interesting. You know, keep watching it. So that's I missed it, but it's fine. Here it is. So it was pretty good when the CHF, the SNB, the Swiss National Bank, paused the interest rates. That was the move. So this is why I'm mostly likely turning bearish to the CHF as well. So I guess, you know, in the next couple of months, I would say we may see CHF lower, not because the Japanese yen is strengthening, but as because the CHF is losing its strength. That doesn't mean that the Japanese yen is like, oh my God, is it strengthening? Let's sell USDJPY. No, it's just because CHF, you know, is switching the rhetoric of the monetary policy, and that it's making it, you know, a little bit weaker at the moment. So I would, you know, change my bias on CHFJPY, get off from the long and going more to a short side on the market. Anyways, next, let's go for the CAD. Let's go USDCAD. Yeah. Okay. All right. So the Canadian dollar started the week on a strong note last week, right? We had this drop, outperforming most major currencies, except for the New Zealand dollar by the end of the week. There was a slightly dip on Tuesday, following higher than expected inflation data from Canada. That's possibly due to a profit taking and a shift in focus to declining oil prices. But on Wednesday, the risk sentiment prevailed as the Federal Reserve hawkish statement, you know, as I've mentioned, influenced the global markets. This led to some losses for the Canadian dollar against most major currencies, most of the major currencies, not all, except for the Australian and the New Zealand dollar. However, the Canadian dollar is quickly regaining its bullish momentum, as I've mentioned in the beginning of the webinar, and likely supported by the rising of other oil prices following the news that the Russia would temporarily bin fuel exports to support its domestic full economy. So this week, the only economic event for the calendar is the GDP release, which is expected to show a slightly improvement, but remaining negative. The majority of movement in the Canadian dollar this week is likely to depend on the movement of the US dollar, right? So as I mentioned as well in the beginning, we have US dollar and Canadian dollar as friendly, right? So US and Canada, they are friend partners, I would say, and they help each other. But when the US dollar is going up, Canadian dollar is going up as well. So it's pretty tough to trade USDCAD, but it is a good, you know, it is a good moment, I would say, to short USDCAD, in my opinion. Okay, not now. I'm not saying okay, let's go everyone short now. You have to do your own analysis, but in my opinion, we may, you know, have a good opportunity to short it, as I've just mentioned. The you know, it's the Canadian dollar is supported by raising oil prices, especially that the Russian, you know, say that temporarily ban the fuel exports to support its domestic fuel economy. So as I've mentioned as well, the Canadian dollar is likely to depend on the movement of the US dollar this week, the oil prices as well, and the Chinese manufacturing PMI, and overall the risk sentiment of the market. So if anything happens around the globe, you know, let's say Russia says something, or China says another thing, or maybe Australia doesn't go too well, then it will affect the Canadian dollar. I continue to look for long opportunities on the Canadian dollar against the weakest currency. So CADJPY would be a good opportunity to go long as well. Please, sorry. It's not here. Okay, let me add it. Okay, here. So of course, we already had this opportunity forming down here. But if we have anything, let's have a look. If we have anything, you know, coming back somewhere around this area, we may continue to go up as the CAD is stronger than Japanese yen, right? And USD CAD as well. If we can, you know, go up somewhere around this area here, we may be able to short all the way down to here. But I don't have any target yet. I just don't see any good trade opportunities, but I'm just saying for you guys. All right, let's move a bit quicker because I see a few people are moving off and you guys need to, you know, you guys have life as well. So CHF, and I only have CHF, Australian and New Zealand dollar. So the Swiss franc, let's go for CHF, USD, CHF. Where is it? Not here. All right, so, oopsie, that's not good. Okay, I'm losing a bit of data here. I have my pricing. Let's go for CHFJPY instead. Oh, there we go. Okay. So the Swiss franc had a tough week, largely due to the SNB surprise decision to keep the interest rates unchanged at 1.75%, when, you know, all the market was expecting a 25 basis point hike. So that was a bit of a shock, you know, when you just get off from a very cold shower, very hot shower, and someone throws you, imagine someone throws you a bucket of freezing water and you just, oh my God, what's happening? Like, oh, that's the ouch. You know, so the market was basically like that. The market was expecting a 25 basis point hike. You know, CHF was doing very well, was very bullish, and then SNB done that. So as soon as they done that, the whole CHF structure changed to a bearish momentum, and it's, you know, losing for US dollar, losing for Japanese yen, the pound, the euro, the Australian dollar, the New Zealand. So basically is very weak at the moment. The SNB, you know, it was a very unexpected move, and it did have a significant impact on the value of the CHF. But anyway, so some recent data had suggested that SNB might postpone rate hikes. So not that because they paused now that they will be like that forever. So few people were saying that they were a pause to have a bit of time to keep hiking in the future, right? So the decision is to surprise many, and of course it led to a bearish sentiment around the Swiss franc. So it was a very tough week for CHF. They may have a light week ahead in terms of economic drivers. So I'm watching pretty close the CHF, you know, and its recent bullish momentum has begun to fade, as I've mentioned already. Since last week, I've been like, okay, I may not be looking to long CHF anymore, just because, you know, I'm not feeling. Just my feelings are not very well towards the CHF. And yes, indeed, we had a pause. So, you know, it may still offer some short opportunities against the weaker currencies. I would say just take a lot of careful on CHF. It's a very technical market at the moment. But my personal take would be starting to fade this bullish momentum towards a bearish momentum. Okay, so I would look to long USD CHF. I would look to long short CHFJPY. Right. So last two and then I let you guys go. All right, thanks, Augustine. Thanks, man. Thanks for staying with me. So let's go for AUD. Where is AUD? AUD USD is not here. All right. 4 hours. Well, I've been mentioned already a few times, right, that we would have some movements towards this area, and I would be looking to short. The Australian dollar had a strong week last week, largely driven by a positive sentiment from the Chinese stimulus measures. But however, the AUD faced some challenges as well, such as when the Federal Reserve hawkish tone spooked traders. But nevertheless, the AUD rebounded on the Friday following the release of the Australian Composed Purchasing Managers Index, the PMI, which showed an increase, so indicated improving business sentiment. So we did have this little move up on Friday, but as we can see now, it didn't change much. The bearish momentum that we are getting from the Fed, so we may continue to go lower and lower, somewhere around these areas, and then we may go to the 162. So if we can go for the 162, that would be my target right now. Not 162, 062, 062, right? So that's my target at the moment. I know it's a short target, but we may have to watch how the price will react after it breaks down here. If it goes to too much momentum, then I would go to 160. But at the moment, 162 would be my first target, right? So this week, we're going to have the CPI and retail sales data that will drive for the Australian dollar, basically. And I expect the CPI to rise. All right, so I am expecting the AUD to have a higher CPI, so that would basically be bullish for Australian dollar. But anything can happen tomorrow, so it's tomorrow. But anyways, so I'm favoring a neutral to bearish sentiment for the Australian dollar this week. But yeah, let's see how we're going to go for this. So depending on the data on tomorrow, but I will do a video, so stay tuned on our YouTube channel, so then you can get the update on what I will find out by the AUD. So yeah, Australian dollar, AUD, USD, I would look to short if we grab any good opportunities. Not at the moment, but yeah, primarily Australian dollar, it's doing pretty bad right now. Next, let's move to the New Zealand dollar, and we finish. NZUSD. Right. But again, pretty similar as the AUD. We are on a very similar price. So, but we had a good week on the New Zealand dollar last week, likely due to the strong economic conditions in Asia in overall, particularly in China, recent stimulus measures. Despite mixed economic data releases, there were some highlights that contributed to the New Zealand strong performance last week, and that was the New Zealand dairy auction prices increased for the second consecutive auction, with both overall prices and key whole milk pounder, the WMP, prices rising by 4.6%. Next, we had the New Zealand current account deficit decreased from 4.66 billion to 4.21 billion. So the government is paying some debt in the second quarter, marking it's the second consecutive quarterly decline. So it did had a positive impact on the New Zealand dollar. And we had the GDP as well. The gross domestic product grew by 0.9% in the second quarter, surpassing all the expectations of a 0.4% increase. So it did had a 0.5 more than expected, and rebounding all the way from negative 0.1% reading in the first quarter. So this week, the New Zealand movements will largely depend on Asia economic sentiment, as well as same as for the Australian dollar. The New Zealand dollar is more popular buying during these times of risk on, because of the correlation with the commodities. But we will also be watching for further developments of the China market because it has a huge dependence on the New Zealand dollar as well. But overall, I remain bearish on the New Zealand, especially after its recent retracements against many pairs, right? So if we can have a bit more up movement somewhere around those areas here, I would be looking to short without any problems, right? I don't have any target yet, but I will find out some targets on the next webinar for you guys. Analysis for the gold. Yes, I can do a gold analysis pretty quick for you. Are you still here? Yeah, you still here. Right, let me do it for you. Okay, so gold is a very different market, right? It's not the same as Forex. Yeah, of course, you know, we are trading gold against the US dollar, but it's different. It's not like Canada against US dollar, right? It's a whole different complexity, I would say, of market depth understanding that you need to have. But short answer, I would continue to short the gold until 109. All right, 109, somewhere around here. 109. All right, so we have few points, and then if we break down this structure, we may go down here. So for the gold, you need to pay attention on Australian dollar. We need to pay attention on China. You need to pay attention on New Zealand dollar. Those are the trees that are main producer of gold on the global market. All right. So yeah, I would continue, in my personal take, I would continue to short gold. I don't see gold any higher at this moment of the market as a risk of sentiment in the market. Yeah, that would be my take on gold. All right, guys. So for that, we finish our webinar today. I hope you guys had a good 1 hour and 30 minutes with me. This will be uploaded to YouTube tomorrow, so you can have you can come back and watch it anytime you want. So that's it for today, guys, and I see you in the next webinar. Thanks for those who made the time to come here. I feel very, very happy, and yeah, have a great week ahead, and I see you in the next Tuesday.